Hello, folks. Welcome to Pro Trader Strategies. My name's Eric Wilkinson, and this is Spotting the Trade. Hey, before you go, make sure you folks click on that subscribe button because, like today, I almost popped in here unannounced earlier on when I was finding some opportunities in the overall markets. We'll talk about those in a minute, but the casino sector is what I'm particularly interested in today. So make sure you got that bell clicked. And if you have any takeaways, hit that like button for me. What I'd like to think of is you're throwing the robot or the crawler a little cookie, and he runs out there and finds somebody that looks just like you. All right, and finally, over there on the side, comment throughout this video. I'm going to be keeping my eye on the comment section to make sure you guys are clear of concept. And hey, if you want me to look at something, click on that comment section, type something in there, and we'll go back and forth with it. All right, so without further ado, let's get on with the economic data. And across the pond, we got a bunch of economic data. Remember yesterday I was talking about the CPI, PPI, and the PCE? Well, we have that similar data coming out of European region. And so I'm going to go over that real quick because their numbers are just a little bit different. What they start out with is the PPI, very similar to what we do. This is the producer price index. So we start out with the PPI. If I can get a pen here going. So we start out with the PPI, right? Which is the producer price index. This is what the input prices are. We saw that uptick in Great Britain, basically. Okay, so we saw that uptick, and it upticked by about 2%, 0.2%. All right. Well, what we are looking for here with these data points, are they able to offset those higher prices, the input prices, to the consumer? So then we look at the consumer price index. Now, this is going to be anybody that consumes products, okay? So CPI could be a company that purchases goods from another company and then produces another widget. Well, what we saw with this, though, is that the core CPI, let's just go, or stripping out food and energy, we did see that uptick on the core CPI by about 0.3%. So we can easily see that already that these corporations are offsetting higher prices. That's inflationary. And then we strip it down further in Great Britain. They call theirs the RPI. And basically, this is the household consumption, all right? So we're stripping out some of the other layers that could be in the CPI. And we can see in this number that it trickled all the way down to the consumer. The household is seeing inflation ramped up, at least in Great Britain. Now, let's move back over here to the United States, and we got our own economic data points that I think are a little bit more impactful today. Now, remember, we've been seeing these manufacturing numbers, the Empire State, the Richmond Fed, all of those manufacturing indexes come in lower than expected, which I've talked to you about, folks, is that is going to lead to a lack of demand in crude oil. Well, we've seen that consistently show up lower on these manufacturing indexes. Today, though, are we seeing the first sign of ramping up again? Because the Empire Manufacturing Index coming in at 34.1 is really good, folks. It was expected to be in line with last month at 18. Now, remember, last month we really missed on that number. That was expected to be up in the 30s. We got an 18. So that was a real wet blanket. Today, we're expecting it to be a little bit more consistent. Well, we knocked it out of the park with this number coming in at 34 versus 18. That's going to give us upside potential. Now, here in the United States, importer prices was a bit of a surprise and a good thing because we saw importer prices come off a little bit by 0.3%, expected to increase by 0.3%. So that not showing the inflationary pressures, which we would expect on the imports, because remember, we still have a shipping problem going on. Prices for shipping are elevated. That should be impacting this number. Now, here in the United States, still, we got capacity utilization in line with expectations, but I want to run down to crude oil, which I'll throw up a chart here for crude oil. Folks, I forgot to share my screen for you on the inventory. Great Britain, PPI, is the producer price index. We saw a slight increase of 0.2% over what was expected. We then see that they're passing it on to the consumer, which does include some of the broader aspects of the manufacturing sector. And then also all the way down to the consumer in Great Britain, we're seeing those higher prices get passed on. But here in the United States, we got our economic data, and that was, like I said, with the CPI, what was the other one? Sorry, capacity utilization. But crude oil inventories, folks, a drawdown of 6.4 million barrels, expected to be a drawdown of 3.6 million barrels. Now, why is this important? We've been seeing these builds happen. Today, that drawdown means there's demand there. Now, are we seeing just production of the materials that we can pull out of the raw crude oil? That's polypropylene for plastics and distillates, gasoline. Okay, those are some of the byproducts. Cushing, also all drawdowns in inventory. Now, Cushing, you can just think of it as it's basically the pipeline where all the fingers come in and it redistributes. So those inventory levels came down as well as what we saw in this headline number. Gasoline inventories are down, and so are the distillates, which goes in the manufacturing process. So all of those things were drawn down, and we're seeing this Empire manufacturing number start to rebound. That, to me, is some real demand behind crude oil here, okay? So my risk would be to the upside all of a sudden here in crude oil with this much demand across the board. Now, bonds, with all of this pretty good economic data, to be quite honest, from here and across the pond, we're seeing some weakness here in the bonds. I don't think that we're going to see any type of taper of asset purchases. That's what you're going to hear on the news. And what that means is the FOMC, the Fed governors, are buying these bonds in order to suppress interest rates, because the interest rates are directly inversely correlated to the bonds. So if in this case we see bonds traveling higher, so price is going higher, right? We're seeing these prices go higher. That means that we see that interest rates go down. It's kind of like a teeter-totter, right? So what the Fed, the FOMC, is down here doing is they buy bonds to push this price higher, okay? So that's what we're hearing from asset purchases. Now, you're going to hear taper. Taper means that they're going to slow down on some of those asset purchases. Now, that's just a signal. When they're slowing down on this asset purchase, they're not going to slow down on billions of dollars. We're talking millions, and it's really not going to be that major of an impact on this. But we can see that that's what the Fed is going to do. Talk is that they're going to start tapering, slowing down, not using as much money to hold this market up. Well, I don't think that that taper is going to happen before the end of the year, and I don't think that they're going to raise interest rates until maybe the fall of 2022, because I think that we're still in a situation where it's very vague. A lot of the global economies are a bit sketchy. Now, with strength in the economy, we're seeing a little bit of weakness here in gold futures, but gold should be driving higher. We're seeing inflationary pressures across the board. Gold is an inflationary gauge. So the fact that it's stuck here right at around that 1800 level that I've talked about being a psychological level, it just can't break through to that 1800 and stay there. Now, we do have the point of control right here, and you guys have heard me talk about this. The point of control acts as a magnet. The point of control, which is where the time and volume's been spent. It's going to want to be comfortable there. But with all of these other headwinds, I would expect gold to push up into the 1800s here with all the inflationary pressures, the economy being in flux, China talking about a shutdown. We'll talk about what's going on with China and the casinos and stuff like that. That's some big news going on there. When we get to my trades, if I can blast through this, Bitcoin getting a push to the upside. We talked about Litecoin, right? Walmart not accepting Litecoin after that whole debacle, giving them the push to the upside. VIX trying to figure out what's going on because we've got a bit of a mixed bag here, folks. We've got the tech sector in the NASDAQ moving to the downside. They've had the best run on the upside, and the tech is really waiting on earnings around this corner. And the only thing that I think that can really give a major next leg to the upside is if we can see that there's going to be more lockdowns. Now, we're already starting to get some hubbub out of China where there's possible lockdowns going on there where they're going to extend some of their quarantine areas. So that could give the tech sector a little bit of a boost to the upside there. And we've got the Dow Jones Industrial Average right there at the point of control. Again, it's going to act as a magnet, probably calm down here. I don't foresee this really breaking out to the downside. Remember, Dow Jones is some of the blue chip stocks. They've been lagging a little bit, so there's still value there. E-mini S&Ps trying to get back up into our trend channel. Now, we talked about this time and time again. This would be a very early entry if we were going to get involved in something around this little doji here. Sorry, trying out the new stuff here. Let's go right here. This little pattern setup. As you can see, I just covered it up, just playing around. All right, so let's just go back to what we know. We can see that we got another one of those candles, and this candle being a green one today at the bottom of a move is what we're looking for a bullish move. So we've broken outside the this trend channel, which has been locked solid for quite some time. I can even show you on the SPY where I have the same trend channels basically. But here, bouncing off the 50-day simple moving average, it's not lined up with the point of control. So it will act as more of a support and resistance than the one I'm talking about there over in the Dow Jones. So know that when point of controls line up with any support and resistance that you have to negate that, all right? Because it will flutter back and forth easily. And when we get these bottoming patterns, what we're going to be looking for next is a confirmation back into this trend channel that we've gotten, all right? So that is what you're looking for if you're trying to find some type of bullish move here to bounce higher, okay? So wait for today. We need to see that settlement back in the value area. If you are an aggressive trader, high risk tolerance, that's something that I look for a bullish trade. Most people, I would suggest, especially if you are newer to trading, to wait for this candle to kind of pull back in there inside of this trend channel. That's your confirmation on a bullish move, and you're back into the trend channel. You got two things working in your favor for a trade in something like SPY for a bullish move there. I'm not stepping on that yet, but I am adding some positive deltas. My portfolio is overall negative deltas for the most part, with just about everything in there I can talk about, especially the bank stocks I'm very negative on because I don't think interest rates are going to rise, and that's going to hurt overall margins. So that's where the majority of my negative deltas are coming from. I also have some tech with NVIDIA to the downside. So Intel is more market neutral. So I wanted to add some bullish positions here. So I decided to take advantage of all of the headwinds that we're seeing in the, nothing really to see there, in the casinos here, folks. Now, a lot of headwinds here. What's going on? These guys have a lot of exposure to Macau. Now, Macau is the Las Vegas of the Middle East, of Asia. Now, China really wanted to build up Macau in order to take market share away from Vegas. Now, all of a sudden, 20 years later, these licenses for these casinos are coming due, and they're going to have to re-ante up for these licenses, okay? So like Las Vegas Sands, Wynn are having this headwind of the Chinese government talking to them about not having the pressure of playing games of risk, meaning to go in there and play baccarat or blackjack. They've got to have something else out there where it's not a gamified type of game, if you will. And I don't know what that is for a casino, but to me, it isn't a drawer of gamblers. So they're actually, if they don't follow with this in the next few months, they could have a Chinese delegate, if you will, be in their casino for the foreseeable future, making sure that they aren't trying to pressure people into gambling and are actually trying to get them off of the tables and to do something more productive. And that goes along with the Chinese government also saying that, kids under the age of 3 or under the age of 18, I think it is, can only have 3 hours a week of gaming. All right. They're trying to get away from all of this gamification of anything. Whereas here in the United States, it is full bore going gaming. As a matter of fact, here in Arizona, we weren't allowed to gamble on sports for the most part. Now that's opened up. So I think that the United States ones, the ones that are here, are going to do well. The ones that have major exposure overseas could struggle a little bit. But having said that, I don't think that we're going to see the kind of weakness we saw back at the beginning of the pandemic when we didn't know what was going on. That's the levels we're at here in Las Vegas Sands. And you can see if I stretch this out a little bit higher, we can see that we've got some pretty high volatility. It's actually coming off just a little bit. Last I checked, last 6 months, it was in the higher level here. So here we go. That's what I want, the daily. So stripping out 6 months, the last year's data on volatility. I don't think we'll see that again. But with that said, we're at 100%. We're at the highest levels we've seen in the last 6 months. I'm going to take advantage of high premiums because what volatility tells us, folks, is as volatility increases, those premiums increase, despite the fact that it can go in either direction. It doesn't matter what direction it's going. All premiums are exploding when this volatility does this. That way, we can take advantage of selling. We want to sell when things are really expensive. And this is giving me the indication that, hey, you got some expensive premiums here in Las Vegas Sands. All right? Well, I don't think we're going to go down to those levels that we saw or have the fear that we had during the pandemic of what's going to happen because this is really isolated to Macau. And I've talked about how these folks have streamlined their process and their companies during this pandemic where like Caesars was more profitable, had higher gross profit than any other year, meaning they didn't have the revenues, but their profits, their overall profits increased because they streamlined those processes. All right. That is very bullish for this sector. We could go back down to those levels again, and we could still see these guys having pretty darn good profits compared to their history. All right. So with that said, high volatility, I'm able to get great strike location. I showed you just a minute ago that the low here during the pandemic was $33.30. Okay. So just keep that in your head, that $33.30. Right now we're trading around 36, right? Well, with this volatility expansion, I'm able to get the 34 strike. I did look at the 33 strike, but with a 95-cent credit, my break even is below that low of the pandemic. So I would be more than happy to buy a stock like Las Vegas Sands after what we already know was one of the worst situations we've seen in a very long time. I don't think we're going to revisit that type of paranoia, if you will. So getting that 34 strike, my break even below that previous low, I think is a great play. I'll be happy to get long these if somebody puts these stock to me. So I went into the October because I want to accelerate that theta decay. Closer we get to expiration, that theta decay really ramps up. I want to take advantage of that, get my break even. So I sold those 34 puts in there for 95 cents. All right. If any of this stuff is starting to make a bell go off and you think that folks like you should be able to have some of this information, smash that like button, feed one of those bots to run out there and find somebody just like you. And if you guys want me to cover any stocks, talk about anything, throw it over there in the comment section. I'll be happy to chat with you about it. So bullish move here in Las Vegas Sands, and I couldn't help myself. I had to go into Wynn. I love Wynn casinos. Going to Vegas, that's the place I like to go. It's just, I don't know. It's just the casino I'm drawn to. Well, again, here we go with the volatility aspect. We can see this massive volatility spike. We are at levels we were seeing during the pandemic. All this worry, we're right back down there at those levels. Opportunity as far as I'm concerned. October again, high volatility because I want to sell premium, collect that theta decay, closer duration inside 35 days to expiration. That's perfect for this trade. Wynn, October, 75 puts. It's a little bit more aggressive in terms of strike location, but I don't care. I'd be happy to buy it down there in and around that point of control, because when I sell those 75 puts, yeah, we'll go into my portfolio at 75, but I get to keep the collection of $1.83. That brings my break even down on this trade to about 73.17. So 73.17 is right there in line with the point of control. Who wouldn't want to buy at a point of control? I don't know, because points of control is where the most time and volume has been spent. That's where the folks have found value here. All right. So when you get down to the points of control, that's a pretty good strike location. If the overall market finds that as value, I should as well. Okay. So I'll be happy to buy it down there. Those are the only two trades I've added. Bullish deltas to my portfolio. That is overall negative deltas. Was negative deltas due to all the banks and everything else that I've had. All right. So if you guys have taken anything away from this, make sure you guys hit that like button, subscribe, because like I said, today I almost came in unannounced about 25 minutes early because I wanted to talk about these trades when they were getting set up. I didn't want to have to wait another 20 minutes to come on here. So make sure you guys hit that little bell down there next to the subscribe button so that you guys get a notification. Once I'm pretty confident everybody's getting those notifications, I can pop in whenever I want, not just when we're scheduled. We'll start doing that a little bit more often. All right. That's all I got for you guys. Subscribe, comment, smash that like button, feed those bots. And if you can't take that, take it easy.